Are you tired of giving Uncle Sam majority of your money every single year? Well, what if I told you that by starting a business, you can leverage tax strategies that can put thousands of dollars back in your pocket today? Well, during today's episode, I'm gonna be peeling back the curtain and giving you the 5 best tax deductions that new business owners can use to keep more money and pay less taxes. And trust me, you cannot afford to miss out on number 3. Without further ado, guys, let's get into today's episode. What's up, family? Welcome back to another episode of Tax-Free Living, where I teach entrepreneurs and new entrepreneurs just like you how to live tax-free. So if you're new to the channel, hit that like button, hit that subscribe button. My name is Carter Cofield. I'm a licensed CPA for over 10 years, and I'm going to be giving you some strategies today to help you save on taxes. Now, the first thing that I need you to know and I need you to understand before we can even get into the 5 strategies is I need you to understand that if you want to win the game of taxes, you need to first be on the right team. And what I mean by that is that the tax code was not created to benefit employees, okay? The tax code was created to benefit entrepreneurs, business owners, and investors. So, deduction number 1 is startup cost. So if you start a brand new business, there are most likely going to be some startup costs associated with you starting that new business. Some of that startup cost is going to be organizational costs, which is setting up your LLC, or they're going to be startup costs for you to start your business, like setting up your website, getting a design team, all the things associated with starting a brand new business. And did you know the IRS will allow you to write off up to $5,000 in startup costs and another $5,000 in organizational costs? There's up to $10,000 a tax deduction that you can have for starting your new business. But the business needs to earn money before the end of the year if you want to take advantage of these tax deductions. So what do I mean by that? If you have, let's call it, $7,000 in startup and organizational costs, but your business makes $0 that year, you don't get to take those deductions. Now, but the good news is those deductions don't just go away, but those deductions get put into a carry forward that you can use in future years once the business starts making money. So those startup costs, they go in a bucket, and you can use that bucket next year when the business earns money. So that's one of the things I encourage all new and existing business owners to do. You need to make sure that your business earns money before the end of the year so you can take advantage of your deduction. And let me just say this, because some people say, well, Carter, if I start a new business and I lose money in the first year, is it going to look suspicious that I'm having these deductions and my business lost money and I'm using that loss to offset my income at work? No. How many businesses lose money in the first year? The expectation is for your business to lose money after deductions, like lose money on paper in the first year, because that's what happens with most businesses. So it is not a red flag for your business to lose money in the first year. Your business just can't take a loss 3 years in a row or 3 out of 5 consecutive years, because then you break the hobby loss rule. Number 2 is once you start the new business, right? Once you have the business and you decide to work from home, which let me tell you all, I think it's like 77% in 2024 of small business owners leverage their home to work as well. So if you have a business and you have a dedicated place in your home where you solely work, like this home office that you all are seeing right now, you are able to leverage the home office deduction so that you can write off a portion of your rent and a portion of your mortgage every single month. Did he just say what I think he just? Yes, I did. If you have a business and you have a home office, you are able to leverage the home office deduction to be able to write off a portion of your rent or your mortgage every single month. Now, if you want to know exactly how to calculate that deduction, check out one of the previous videos on our page. I did a complete walkthrough of both methods to write off your home office. I did the simplified method and the actual method. I even compared the numbers for you all so that you can know how to calculate your own home office deduction. So check out one of our previous videos so you can get that calculation. Now, number 3 is big, right? Because most of us either have a vehicle that we use personally, that we use some for our business, or most of us have a direct vehicle that we only use for our businesses. And this is where having a business can help you save a lot of money, because you are now able to write off your vehicle expenses for in your business. If you're a new business owner and you have an existing vehicle and you use that existing vehicle, let's say 40% for business. So you use the vehicle 60% personal, but you use the vehicle 40% business. Well, guess what? Now 40% of the expenses related to your vehicle are now tax deductible to you. Okay? So there are 2 ways that you can write off vehicles. There's the actual method, which I'm explaining right now, and then there's the mileage method, what I'll get into in a moment. So if you have a vehicle use a 40% business use, you are able to write off 40% of the expenses related to that vehicle. So what does that mean? That means you can write off 40% of your automobile insurance. That means you can write off 40% of the interest on your car note. That means you can write off 40% of the lease payment. That means you can write off 40% of gas. That means you can write off 40% of repairs. That even means you can write off 40% of car washes and car details. All the expenses related to your vehicle, you are able to write off in portion to the business use. So the more that you use the vehicle for a business, the increased deductions that you have. And guess what? If you use that vehicle at least 50% for business or more, you also get to write off depreciation for the vehicle, which in 2024, if you were to get a new vehicle or get a used vehicle, you will be able to write off up to $20,200 in depreciation deduction. So all depreciation is saying that the IRS is saying, we know your car is going to lose value over time, so we're going to give you a tax deduction today for your car losing value in the future. So you don't have to actually spend money to get this deduction. It's what we call a phantom deduction, and you are able to get the write-off without actually having to spend the money. What's up, family? If it's one thing that I know is true, is that you can survive without community, but you can't thrive without community. And in order to build true community, you have to get in the right room with the right people. And so we wanted to create that room especially for you. This is why we have Wealth Weekend. This is gonna be a weekend experience where you're gonna get amazing education, amazing experiences, and amazing entertainment all in one weekend, so you can become that first generation millionaire in your family. Because one thing I stand on is generational curses ran in my family until they ran into me. So my question is, are you gonna be that curse breaker for your family? And if you want to, you need to join Wealth Weekend. So click the link below and we'll see you there. Now let's get back to the episode, right? So those are some major deductions for vehicles. So that's the actual method. If you want to write off your vehicles using the mileage method, well, it's simple as well. All you have to do is take the total business miles that you drove and multiply it by the mileage rate. And I think the mileage rate for 2024 is 67 cents. So if you drove 10,000 business miles, 10,000 times 67 cents, that's $6,700. Right? So you will get a $6,700 tax deduction for driving. And here's the crazy part. Some of you all drive Uber. Some of you all drive Lyft. Some of you all do DoorDash, right? Some of you all do Postmates. Some of you all leverage your vehicle in your side hustle every year. But have you taken the deduction that you're entitled to for using that vehicle in your business or your 1099 contracting job? Now, the next major deduction that you can get once you have the business is you are now able to deduct your travel, okay? And I don't know about y'all, but I love to travel. I've actually been to 36 countries at the age of 32. right? And I got to make sure I get to more. Like my goal is I want to have more countries than I have in age. So I got to travel some more. But I've been to 36 countries, and a decent portion of those trips I was able to write off in my business because I understand how to turn my personal vacations into tax deductible business trips. How much more could you travel in 2024 if you found ways to have the IRS help chip in on your next trip? Do you see the power of leveraging the tax code in your favor? It's crazy. Tax deduction number 5 is retirement plan tax credits. If you have a small business and whether you're the only employee or you have other employees, you can get a tax deduction for contributing to your own retirement plan. So let me talk to my solo business owner for a second. If you're a business owner and you're the only employee of your business and you set up a retirement account for yourself, SEP IRA, solo 401k, right? If you set up these accounts, you get to deduct the money that you contribute to these accounts. So you get to invest in your future and save taxes today at the same time. And to make it even better, if you have employees, not only will you be able to get a tax deduction for the money you contribute to yourself, you can actually get a tax credit for the money that you contribute to other employees. So like, I tell my clients all the time, the more you invest, the less you pay the IRS. And this is one of the strategies that you can use to leverage investing in your future, building wealth, and saving on taxes at the same time. So whether you're a new business owner or you're a seasoned business owner, don't miss out on these 5 tax deductions that can help put thousands of dollars back in your pocket and keep the money out of the IRS's pocket. So if this was helpful, please guys, let me know in the comments which of these 5 deductions you're gonna take advantage of in 2024. And again, hit that subscribe button so you can know when the next video drops. Other than that, guys, I'll see you all next time.